Hello and welcome to Eurovat Refunds webinar, an introduction to value-added tax, presented by Eurovat Refunds CEO and co-founder Britta Eriksson. Here, over to Britta.
Thank you, Daniela, and thank you everyone for listening in. So this is to tell you about the general rules of value-added tax, how it works, and how it is compared to the sales tax that is in the United States. So first, just shortly about our company, Eurovat. We were founded in 1992, and we are experts in assisting North American companies with their complex VAT issues, mostly for Europe, but also for some other countries. And that can be how to reclaim the VAT that they have incurred, and also when they do need to register the related management and filings, and that can be related then to organizing conferences, or when they drop ship or warehouse goods in Europe, when they do installation and service contracts, and also when they import to Europe, including e-commerce on both products and services. So VAT, value-added tax, that is the tax that is implemented in almost every country in the world except the United States and a few other countries. And the tax is, as opposed to the sales tax that is just added to the last chain when the end customer buys the product, the VAT consumption tax is added to most goods and also services in all levels of the production and distribution chain. It should, though, however, never be a cost to company. It is a cost to the private person in the end, but it should never ever be a cost to the company. But in order to accomplish that, you do need to look at the VAT rules before you start to trade internationally. Sample of VAT names and rates. The rates vary in the world from 5% in Canada to 27% in Hungary, and it can be anywhere between. In most countries, it is around 15 to 20%, so it is a substantial cost that you need to be aware of and try to avoid. It can be called different things, for example, VAT in UK and other countries, Canada and Australia, they call it DST, Austria and Germany call it MWST, TVA in France, Italy IVA, and Japan call it ACT. But it basically stands for the same kind of tax. Here is a map of the European Union countries. So there are 28 countries in the European Union, and they, even though they have their own VAT system with a VAT rate of usually 20%, it is a very connected system. And the VAT rules are the same, I would say, to 80%. Then each country can do a little bit different interpretation, but basically works the same. It is also a connected system. So that means, for example, that when you trade between the EU countries, for example, ship something from France to Germany, you can use the VAT rules, but the countries also compare notes. So they make sure Germany can, for example, ask France what has been reported on their side, and it has to match up with the German side. So there is a connection and a close relationship between the tax authorities. You can say that European Union works like the United States in terms of trade. You know, if you import something into the United States through Atlanta or LA, you pay duty at one time, and then it is for free trade within the United States. You only have to check sales tax rules in the different states. Same thing with the European Union. You can import to any country here from outside. For example, you can import from US to United Kingdom or Holland or Germany. You will pay the custom one time. And now it is for trade within the European Union. You can sell and purchase among all these countries, but you have to look at the VAT rules, and you have to be registered for VAT in one of them usually. So what can the North American company incur VAT on? Well, again, Europe and also from all other countries, you can incur VAT, for example, on lodging and transportation, and also some other services. VAT, as I said, is also applied to services. But for Europe, it's not supposed to charge VAT on so many services anymore, but there can be. And from other countries, there can be as well. So look at marketing service, consulting service, accounting services, and so on. And your hotels and transportation. Trade show and conferences can have VAT on it. And then when it comes to goods, there can be a lot of VAT. And that is, for example, when you import VAT, custom will assess VAT on the products. If you purchase and drop ship goods within Europe, that will also be subject to VAT. And again, from the European Union, it is refundable often if you register ahead of time, but in the other countries, if you incur VAT, it is usually not refundable. So it is something to be very much aware of before you start to trade, so you make sure that you hopefully don't incur any VAT, and if you do, you can claim it back. So how does that work? Well, I'll give you a few samples where it can affect you as a North American company. But basically, as opposed to the sales tax, how it works is that a company within that country, for example, a company in China or in Argentina or Germany, when they sell within their own country, they have to charge that to absolutely everyone. It doesn't matter if the product's going to be resold or not. And also they have to do it on services. So for example, the lawyer and the accountant has to charge VAT on all their services, and also the computer company has to charge VAT on all their products. It doesn't matter if they sell to a distributor or to an end user. Also, they pay VAT on all purchase invoices. So every invoice, more or less, that comes into the company has VAT on it. So that has to be paid to the vendor. And then, in the end of the month, they declare the VAT to the tax authorities, and that means that they report in how much VAT they have invoiced to the customer, and they can at the same time deduct the VAT they have paid to their vendors. And the difference is due to the tax authorities. So they pay VAT on the value that they add. And in the end, VAT is never a cost to them, and it should be counted on a balance account and be zeroed out at the end of the day. So then again, some examples on when this can be an issue for the North American companies that deal within the European Union. Sample one, for example, is if you do e-commerce, you sell online products through Amazon and Costco in Europe. Also, I want to point out if you sell digital services like online games, music, and so forth direct to private people in Europe, this is also an issue. If you, as a U.S. company, attend a trade show or you organize a trade show in Europe or a conference, and perhaps part of this you ship in material for the show. Also, quite often we have medical device companies in North America that have to store products in Europe and sell on to their customer. That can be, for example, hospital and clinics. These kind of customers are usually not used to being the importer, and therefore the North American company might have to store things in Europe and sell it on. And also, for example, the last example here is a computer company that ships in warranty products to Europe. So these are all typical scenarios, and they all have different ways how to handle the VAT, but the VAT can be handled, and important to do it before the trade starts. So then, what does VAT registration mean, and when is it required? What is unique with the European Union is that you can register for VAT only. You don't have to have an established company like a subsidiary. Usually this is possible when all you do is ship around products, sell and buy. Again, that has to be checked on. There might be a permanent established issue, for example, when you have people on payroll or you have offices there. But if all you do is just ship around products, then usually VAT registration is enough. But that has to be confirmed each time, but usually it is. This is not possible in other countries. So for example, if you trade like this within Argentina or China or Singapore, you cannot do it. You have to have an established company there. But for Europe, you can. So for example, typically it will be that the North American company who has to import goods into the EU and keep it stored and sell it on. And that again can be the medical device company, or it can be the e-commerce company that has to ship into, for example, the fulfillment warehouse of Amazon and sell on. It also is the company that drop ships within the EU. So that means the company that buys from a vendor in Europe, for example, UK, and they sell it on to a customer in UK or Germany. They also have to register that. And also then if you store and sell from EU warehouse. Also, what most people don't realize is that what happens with the VAT when you import goods. So in all these VAT countries around the world, what happens when the goods comes to customs is that customs, the local customs will assess duty as you expect and know, but in addition they will also assess VAT. And this has to be paid to customs upon import. Normally the American company that sells product to Europe or China, they will make sure that the customer is the importer, And then what the customer do is they pay the duty and VAT, and they are already registered for that. They go home and just claim it back, no problem. But again, when the North American company have to be the importer for one or another reason, then this is what happened, and be aware. So in this particular sample, we say that the commercial value is 100,000. Duty is assessed, we say 3% by customs. Nobody is surprised there. Then you have a subtotal of 103,000. And then what is a surprise to many in US is that then also VAT will be assessed. So customs will assess VAT on the product as well. So the VAT will hit your product immediately when they come into these countries. And again, not a problem if the importer is already registered for VAT, because they just pay it out and claim it back. But if the North American company has to act as the importer, they do need to register up front, usually, in order to claim this back. Also, how it works then is that the company, for example, we now have a German vendor that buys from Germany, so they will have to pay VAT to every vendor. So in this example, we say that they buy for 10,000, they pay 1,900 in VAT, so they have to pay 11,900 to the German vendor. The German company is registered for that. They know that the cost is 10,000, the 1,900 in VAT they take into balance account, they pay it out, and then claim it right back. So again, they know very well this should not be cost. And again, same with a North American company. If you buy anything from a German vendor, ask them to ship within Germany. They will assess 19% VAT, and you need to know how to, you also can get it back. So here's VAT again if a German customer sells within Germany, or the UK company selling to UK customer, or the Argentina company selling to an Argentina customer. They have to charge VAT, usually also on the freight. So in this example, we say that they have to pay 28,690 on their sale of 151,000. The vendor, again, if it is a company, they are well aware. They will pay all the whole amount to the vendor, and they will book 151,000 as a cost, and the VAT will be in a balance account. They know they have to pay it into the tax authorities, less the VAT that they have paid out. So then all these companies in all these countries, they do basically a monthly VAT return to the tax authorities. And as I said, they will say how much VAT have we collected from the customers, in this case 28,000. How much did we pay out to the German vendor, in this case 1,900. And how much did we pay upon import of goods, 19,000. So in this case, they have get a refund of 7,000. They have to pay in 7,220. That is the difference from the VAT that they have collected against the VAT that they have paid out. But remember, if 1 month they have paid out more VAT than they have collected, then they get a refund. The tax authorities will refund the money to them. So this was the basics for how VAT works. And it is a very complicated tax course. So Eurovat, we are specialized in assisting North American companies, and we assume that you do not understand how this works. So we really handhold in the whole process, explain in detail what it means, how you have to issue invoices, how you have to look for invoices from your vendors, and so on and so forth. And we help you to get registered and to charge VAT correctly to your customer, and how to make sure you got the correct documents from customs and from your vendors in order to claim the VAT back. And we can also help you when you look at different countries you want to do business in, to advise you what is best from a VAT point of view. For example, the Western European countries such as UK, Ireland, Netherlands, Germany is usually a whole lot better, easier, and less costly than, for example, Southern Europe such as Italy, Greece, Spain, and also Eastern Europe such as Hungary and Bulgaria. So that will make a big difference in how complicated it is and the cost for your country. And a lot of times you can choose the country. Actually, it depends on the situation, but it's good to contact us at that point and check. So again, be that smart. Be prepared. If you deal with all these countries, be prepared for the VAT. Always try to, first of all, set it up so you don't have to incur any VAT, but if you have to, make sure you can reclaim it, and this should be possible usually when you deal with the EU countries. And when VAT registration is required, make sure to register ahead of time. So of course, it is the advice, ask for advice before the activity starts. And this is the contact information, and with that, I thank you very much for listening in, and I will turn it back to Daniela.
Thank you, Britta, for this great introduction on value-added tax and how it works when North American companies do business within the European Union. If you have any questions, feel free to email or call us, and we are happy to assist and answer any questions that you might have. Thank you again.